Hi, this is Merrill with Tax Tutor, and in this video we're going to talk about entity selection. So entity selection is important because it makes a difference on how you're treated for tax purposes. But in order to talk about the entities and the selections that we're going to make in those entities, we first off have to understand that there is a difference between a legal entity and a tax entity. So first off, let's cover the legal entities. So for legal purposes, we have several different options for entities. We have a sole proprietor, put that as a sole prop. We also have a partnership, so we'll abbreviate that as a P-ship. We have a corporation, so we'll just put on there corp for that. And then we have an LLC. So if you were to go down to the state, states are what sets up your legal entity. So if you were to go down to the state, these would be your options. Now, sole proprietor is really not a legal entity. A sole proprietor is just somebody who's gone into business. So a good example of this would be my little sister. When she was in high school, she did tutoring for students and for families. And she got paid for doing that. So she would go do tutoring and she'd get paid. She had no legal entity or anything set up. But because she was getting paid, she wasn't a W-2 employee, she was still required to report that income on her return. She was a sole proprietor. And so for her, we filled that out on her tax return. We claimed some expenses against the income. So a sole proprietor, you don't really need a legal entity. If you are doing business, then you are a sole proprietor. A lot of people think you need to be an LLC or something like that in order to report income on your tax return. That's not the case. The IRS is going to require you to report income no matter where you receive it or how you receive it. So sole proprietor is just somebody doing business. Then you could go down to the state and you could set up a partnership. You'd go to the state and say, okay, I want to form a partnership. And these are usually formed in the ways of either a general partnership or a limited partnership. So a general partnership is everybody in that partnership has liability. Everybody is at risk. So if that partnership were to get sued, all the partners are personally liable for what goes on inside that partnership. Now this is making it really simple in simplified terms, just to give you an idea of how they work. There's also limited partnerships, and they at first impression those sound great. Hey, I have a limited partnership, everybody's limited, right? Well, when you have a limited partnership, it's kind of a interesting thing in there, but at least one partner has to take on liability. So at least one partner has to be the one that raised their hand and says, you know what, I'll take on all the liability of the partnerships. So generally we don't see partnerships much anymore because somebody's always at risk of what happens inside that partnership. So we have corporations. Inside of a corporation, nobody has that liability, that risk. It's a limited liability type of an entity where the owners of it don't take on personal liability necessarily. There's ways that could happen, and it gets into the legal side of things that I'm a CPA, I'm not an attorney, so we don't go into that as much, but just to give you a general idea of how those work. And then we have LLCs. LLCs are wonderful entities where now we have limited liability, but we also have pass-through type things. C corporation doesn't necessarily pass through its profits and earnings to its owners. It kind of sometimes gets stuck. So LLCs are a great entity to limit the liability of its owners, and that's why we see so many LLCs being used today rather than these other entities. An LLC is probably one of the most common, if not the most common entity that's set up now for purposes of it just being so flexible, limited liability. There's a number of reasons for that. So those are our legal entities. Now let's talk about our tax entities. So for tax, we have the same thing. We have a sole proprietor. And then over here, I'm going to put the form that they file, okay? So a sole proprietor files a form Schedule C that goes on the Form 1040. Now, for tax purposes, we also have a partnership, and a partnership goes on Form 1065. So partnerships reported in Form 1065. Then, just like we have a corp here, we have something called a C Corp, and that goes on Form 1120. And then finally, for tax purposes, we have an S Corp. And that goes on Form 1120S. So those are our ways of filing. Now I'm going to make one change here just so that it's not too confusing. I'm actually going to drop the LLC down here. Okay? So these are our ways of filing tax returns. So if you will look, you can see that these are our taxable entities, these are our legal entities, and these are the forms we file. And what do we notice? We have the poor LLC that's over here that we haven't really told how the tax works for it, and we haven't shown what the form you file for it is. So that's a good question. What form does an LLC file? Lots of times I'll get new clients that will come to me and I'll say, okay, let's work on your tax returns. What kind of entity do you have? And they'll say, I have an LLC. And I'll say, well, that's great. And then I start to ask some more questions. And the reason for that is because, like we said, a sole proprietor for legal or for operating purposes, file Schedule C. Partnerships, 1065, C Corp, corporation. If you set up a corporation, you can either be a C Corp, you file Form 1120, or you can be an S Corp if you make an election. You have to elect to be an S Corp. You'll notice that there's no such thing legally as an S corporation. You can't go down to the state and say, I want to set up an S corporation. It doesn't happen. It doesn't exist. You can either be a corporation or you could be an LLC. So let's talk about LLCs a little bit and how they work. So LLCs were invented by the state of Wyoming back in 1978. So now I was born in 1979. So LLCs are 1 year older than me, or roughly my age. So if an LLC was a person, it would roughly look like me. I know, not very pretty, but that's how old they are. So 1978 is when they were set up. When they were set up, the IRS took a look at them and said, we don't have any idea what to do with these sorts of entities. So if you were to look at the tax code has sections for sole proprietors. And so if you're a sole proprietor, you go to that tax code and it tells you how to report your taxes and what to do. It has the tax codes for partnerships. So if you're a partnership, you go to the tax codes for partnerships and it tells you what to do for a partnership. It has tax codes for C corporations and S corporations. The reason why they're called S corporations is because it's subchapter S of the Internal Revenue Code. I've had people ask me, what does S Corp mean? What does it mean by the S? And it just means that it was subchapter S of the Internal Revenue Code. That's where we got those from. So we have all those laws, and so the IRS looked at it and they said, we don't have any laws for LLCs. What do we do with LLCs? So they thought about it, and in typical IRS fashion, it took them 10 years to decide what to do with LLCs. So Wyoming invented them in 78, so now we're looking toward the late 80s is when the IRS finally decided what to do with LLCs. And so that's why we don't really see LLCs catching on until the 90s, because the IRS nobody knew what to do with them. Nobody knew how they'd be treated for tax purposes. And this is what the IRS decided to do. Instead of going and writing all new tax code for LLCs, they said, well, let's see here. Okay, if you have an LLC and it is owned 100% by an individual, we're going to treat that as a sole proprietor for tax purposes. And it will file a Schedule C on the Form 1040. So that resolves that. So a little bit of kind of myth debunking here. A lot of people think you need to be an LLC in order to report expenses on your returns. And somehow people think that they need to be an LLC to get great tax benefits. If you are a sole proprietor, an individual doing work on your own, it makes no difference whether you have an LLC or not for tax purposes. Because you could not form an LLC and the Internal Revenue Code treats you like a sole proprietor, you file Schedule C, or you go and you set up an LLC and you own it 100% yourself. Guess what? The tax code treats you as a sole proprietor, you file Schedule C, no difference for taxes. You report your income on Schedule C, you report your expenses, your net income ends up on your return, all the exact same. The difference is that you have some liability protections by having the LLC. So, consult with your attorney, but maybe it's a good idea to have an LLC when you operate. Some states will subject LLCs to tax. California has a minimum $800 tax on an LLC, so maybe that's worth it, maybe it's not, depends on your legal risk. So again, consult an attorney on that sort of stuff. So anyway, that's what the IRS said. Okay, if you have an LLC owned 100% by an individual sole proprietor, and then they said, but you know what happens if they have an LLC and it's owned by more than one person? They said, okay, if you have an LLC and it's owned by more than one person, the tax code is going to treat you like a partnership and you're going to file Form 1065. So, and that's the way that it works. Even husband-wife partnerships, unless you live in a community property state. That's kind of an advanced concept, but if you happen to live in a community property state and you have a husband and wife that own an LLC, there is an opportunity to just report that on the personal return for the handful of states that are community property states. If you don't live in a community property state, you've got a husband-wife LLC, that's a partnership. You have to file Form 1065, a partnership tax return for that. Same thing if you and your buddy form a business, you have an LLC that you each own, maybe you have several buddies, a bunch of people that own it, however that works. You have more than one owner of an LLC. By default, you are a partnership for tax purposes. And then the IRS did something very interesting. They went a step further and they said, okay, you know what, if you have an LLC and if you file Form 8832, an entity selection type of form, then you can elect for your LLC to be treated as a C corporation and you would file Form 1120. So you could go and form an LLC with the state, file this election with the IRS, and then be a C Corp. And then the IRS went further and said, okay, and then if you have an LLC and you file Form 2553 and elect to be treated as an S Corporation, then you can file Form 1120S. So if you look at that, it's interesting that when you have an LLC, there is no specific form for an LLC. You can't go to the IRS website and say, what form does an LLC file? It doesn't exist, it's not there. However, an LLC can file any one of these major forms, a Schedule C, 1065, 1120, or 1120S. So when I have a new client that comes to me and says, hey, I have my business that I operate, I need help filing taxes, and I say, great, what do you have? What type of entity do you have? And they tell me LLC. My very first question is, okay, great, do you own that LLC 100% yourself, or do you own it with your wife or your spouse or with multiple people? And they'll say, oh, I own it myself. And I'll say, okay, then have you made any elections? Are you an S corporation? Are you a C corporation? Have you filed any of those elections? And they'll say, I don't think we filed any election. And say, okay, great, you're a sole proprietor. Or I'll say, oh yeah, we made an election to be an S corporation. Okay, then you're an S corp. Or we made an election to be a C corp. And say, okay, you're a C corp. Or they'll tell me we have multiple owners. And I'll say, okay, well then you're a partnership unless you've elected to be a C corp or an S corp. So hopefully that doesn't get too confusing, and it helps to understand all these different pieces, all the different parts. You have legal side of it where you go down to the state and you set up an entity. You don't go to the IRS and set up a partnership or corporation or anything. You certainly don't go and set up an LLC. You go to your state and do that. And then based on how you're set up, the IRS then says, okay, you form these entities with the states. This is how you're going to be treated for tax purposes. And when you're treated like that for tax purposes, these are the forms you're going to file. So so hopefully that is helpful and clears up some confusion and gives some direction on what type of entity you can select and have for tax purposes.